Today on the Accounting for You podcast, we have a very special guest, Anna Price. She's a partner with Jenkins Fenstermaker. Anna, what are we talking about today?
Well, thanks for having me, Chris and Jay. Today we're going to be talking about the importance of estate planning. We're going to be talking about, especially for small business owners, business succession, and the different options for estate planning, and maybe some horror stories if you don't have your proper estate planning in place.
All right. Well, stay tuned for that. I'm looking forward to that. Welcome to the Accounting for You podcast, brought to you by the accounting firm of Jenkins and Reynolds CPAs. This podcast is designed to provide relevant tax and accounting information to help you and your business succeed. If you enjoy listening in, please like and subscribe to our channel. Now, on to the show. Well, welcome back to the Accounting for You podcast. I am Chris Reynolds, CPA and partner with Jenkins and Reynolds CPAs.
And I am Jay Adkins, CPA and partner at Jenkins and Reynolds CPAs.
Well, as we kind of brought you in there and teased it a little bit, we have Anna Price. She's a partner with Jenkins Fenstermaker, dealing with estate and trust work. And we thought we'd have Anna just go ahead and introduce herself a little bit and tell you why she is a very good attorney, and we really appreciate having her on here.
Well, thanks for that compliment. Like Chris said, my name is Anna Price. I am a partner at Jenkins Fenstermaker. I focus my practice solely in estate planning, estate administration, and some probate litigation. We also do some elder law. I am originally from the Charleston area, but came to Huntington to go to Marshall. I am a Herd fan, but I also went to law school at WVU, so I have allegiance for both ends of the state. I got into trust and estate work because I took an estate planning class in hopes that I could help update my parents' wills. And when I took that class, the professor and I had a good connection. I was able to learn a lot from him. We worked very well together, and he actually hired me right out of his class to come work with him after I took the bar. And I worked with him at a local firm here in Huntington, and I always say that this area of law found me. So it's worked out well, because I'm not sure that I would love practicing law nearly as much if I had to do any other area. So.
Well, very good. So I guess a big question for our listeners, we have a lot of small business listeners and individuals too. So why is estate planning so important for individuals?
Well, I think that all planning is important, because if you don't have a plan in place, you're going to probably end up in a crisis planning situation where you're going to have less time to think through your options. Your options may be diminished at that point. So estate planning is really, really important for individuals of all net worths, all small business owners and large business owners, of course, because it's important that clients know what the next step will be, that they get to have a hand in determining how what they've worked so hard for will transition to the next level. So estate planning does a lot of things for us. People think about it being a post-mortem process, but it's really not. I mean, we have estate planning for when we're older. We have estate planning for when we are on vacation in an all-inclusive resort and we need somebody to do us a favor for our business.
I want to do that estate planning.
That's right.
Sounds good.
So there are a lot of options for estate planning, and it's much more comprehensive than people believe.
Okay. I've talked to a lot of people, if I see that, hey, they tell me a client says they don't need a will, and I'll say, you really need to talk about this. And we don't like to talk about that. It's like it's going to cook something up. It's going to happen, because I'm like, you're going to die anyways, or you're going to need this kind of care at some point anyways. Let's talk about it. Let's get you to an attorney that can.
That's exactly right. I always tell my clients who come in, they say, we've really been putting this off. We just didn't want to think about it. We were afraid we were going to sign these documents and then something would happen. And I always assure them that I don't have any extra agreement with any higher power than they do. And so it really has nothing to do with actually signing the document. But really, you can't be too late to do estate planning until you're absolutely too late to do estate planning.
Right. And there's not a lot of repairing at that point. It's just...
At that point, you're dealing with the cards that have been dealt, and I'll tell you, most people are not thrilled with that. In fact, Chris, I don't know if you know this, but it's one of the facts that really scares potential clients into doing their estate planning. But if you don't do your own estate plan, do you know that you actually have one in place? And your state legislators write it for you.
Well, there you go.
So I'm not sure what kind of warm and fuzzies that gives you, but a lot of people don't like that idea.
I don't have that much faith in my elected officials. I would rather put my faith with you in writing an estate plan.
That's right. You'd like to make your own decisions.
One
I
thing
agree
you
with that.
mentioned, Anna, you talked about people procrastinating on their wills. What about the people who just say, I don't need a will?
I have a lot of those people, Jay. In fact, one of my favorite quotes from clients is, I don't have an estate. And of course, we know as professionals that everybody has an estate.
Right.
You know, everybody has something that they exert ownership over. So when people say that they don't need a will, I remind them that maybe you don't need a will, but if you don't have one, you're probably going to cost your loved ones some additional money that they wouldn't otherwise have to pay. And you're relying on these elected officials to write your documents, and I can't guarantee that those laws won't change at some point.
Yeah, that's the other thing people talk about, and you say, well, the state will take care of it.
Yeah.
I think that's a bad plan. So what,
It is.
like we're in West Virginia, so what happens if someone dies without an estate? I mean, without a plan, a will, for instance.
Yeah, so there are intestate succession statutes in every state that determine where assets go. And in West Virginia, we base ours on whether or not the person is married and whether or not that person has children and whether or not their spouse has children from a previous relationship. So believe it or not, your spouse's children from a previous relationship can change the amount that your spouse and your biological or adopted children may receive from your estate. We're a little bit better than some of our surrounding states who include our in-laws in the intestate succession. That usually motivates a lot of people. But it's still generally not what people want or what they think. A lot of people assume that they can just write a will to say this is where these assets go, whether it's their spouse or their children, and that's not necessarily the case. In fact, the only person that you cannot disinherit in your plan is your spouse unless you have a prenuptial or postnuptial agreement in place.
Interesting. Well, hopefully that wouldn't happen with anyone.
Right. You would be surprised.
I'd be surprised. I'm sure you could tell us some horror stories about that. So.
You mentioned some extra fees and some extra things that individuals would have to do without a will. Does having a will provide any protection from, say, an uncle, a cousin, somebody that may not be a direct descendant that may be the preferred person to receive the estate?
Absolutely. So when you have a will in West Virginia, generally it's going to be witnessed by two individuals who are not mentioned in the will. It's going to have a notary on it if you have that self-attestation clause in the back of it. But generally it is going to protect your beneficiaries. A lot of places in the code talk about giving deference to a testator's intent, and our case law supports that as well. So making sure that the intent of the person who wrote that will is probably the number one thing that ensures a will is carried through. Now, with that, there are, of course, certain formalities that have to be followed to get to that valid will to ensure that there is no fraud or influence from an outside party.
Okay. So we've talked a little bit about wills. What are some other maybe components of an estate plan?
Yeah, so I always talk about the documents everyone should have, regardless of how large they feel their estate is or the makeup of their family. Every single person needs a will, regardless of what other documents they have. Some people also need trusts, and there are revocable trusts, irrevocable trusts, and the way you determine what type of trust somebody needs is based on what their goals are for why you're setting up that trust to begin with. So if it's a mechanism to protect against creditors like Medicaid or something like that, then you're going to go with an irrevocable trust. If it's something to avoid estate tax, you're going to look at those irrevocable trusts. But if it's something that you're trying to avoid a long probate process, or you're trying to ensure that maybe minor beneficiaries or disabled beneficiaries are protected beyond what you could do in a normal will, then a revocable trust might satisfy. Probably the documents that are most important and probably brushed off the most are the medical power of attorney, living will, and a durable general power of attorney. So a medical power of attorney is a document that allows you to appoint someone to make medical or well-being decisions for you if you're unable to make them. Along with that, some people have a living will that's their personal feelings on how they would feel about things like life support or end-of-life decisions. And then there's also a general power of attorney, which is for decisions for everything other than medical decisions. And that document can go into effect either when somebody is not able to make their own decisions or upon signing the document.
Okay. Well, so the medical power of attorney and the living power of attorney?
The living will.
The living will. Okay. So if someone's in the, I've been with people in the hospital, and someone will come around and say, "Do you have those documents?" And someone will say, "No, I don't." And then the hospital thinks that they can provide that to them. So why, as an individual, should I not use what the hospital uses and come to you beforehand and have a real one done?
Yeah.
Not that what their hospital's doing is not real, but
sure,
one that protects you maybe more.
That's a great question. So let me start with saying that West Virginia is one of the many states who has now adopted a statutory form for a medical power of attorney and living will. Okay, so that means that our legislators also wrote a version of that. It's widely recognized amongst medical facilities in this state. So if a hospital brings you that document and you do not have it in place, and you are getting ready to go into some kind of procedure, or you're having some kind of medical emergency, I think you probably should execute that document if you don't already have one in place.
Okay.
However, I think when you go to an attorney and have one prepared, I think a lot of attorneys still use those statutory forms, but in true attorney fashion, we like to soup them up a little bit. So I think that there are a lot more options presented in an attorney's statutory form or souped up statutory form than there would be in the document you're going to get from the hospital.
But you would think with what you're doing, you could provide maybe for more specific circumstances potentially.
Yeah, absolutely. So we can kind of get in there and talk a little bit more about organ donation, or about how someone feels about transplant options, or even withholding nutrition. People have very, very specific feelings about these things, and I think that it is extremely important that we talk through those and that your documents reflect that. In fact, Chris, what I like to remind my clients about is the scene in Talladega Nights, the Will Ferrell movie, where he is the race car driver, and he's in the hospital, and his wife goes to the physician, and she says, "Doc, I'm ready. I've given it a lot of thought. Go ahead and pull the plug." And the doctor reminds her that he's just taking a nap because he has a broken leg, and he's not in that persistent vegetative state. So when we're picking those medical power of attorneys, it reminds you how much power that agent has if you're unable to make those decisions. So that's an extreme example, obviously a Hollywood example.
Wisely.
But choose
wisely who your agent is.
That's exactly right, because they can actually usually override that living will. So you may say, if things aren't looking good, let me go. And your loved one may say, they're hanging on. So it's important to choose somebody who's going to respect your wishes.
Okay. Well, what do you know?
And one thing that I was thinking about, talking again about the overall estate plan, I'm sure there's the common misconception out there. You had mentioned before all income levels. It's not just for the rich.
No, it's not. And it used to be when I would mention the word trust, or some of my predecessors would mention the word trust, families would shut down. They wouldn't want to hear that, because trusts are things that rich people have. Yes. Movie stars have trusts. And that's just not the case anymore. A lot of times your family situation is going to dictate whether a trust is best for you or not. And there are different family situations in all levels of net worth. So I think it's important that everybody have these documents because honestly, everybody has these wishes.
Yes.
Everybody has given some thought to their mortality or to their hard-earned assets at some point. And so I think it's really important that everybody look into this.
Okay. So if you have an individual come to you to set up an estate plan and you do the will and the powers of attorney and all these forms, how often should your client come back to you to make changes, or is this a document you do, it's a one and done, or how often should somebody change that?
It would be wonderful if this was a one and done thing, Chris, but life changes rapidly, right? So I like to send my clients a little postcard about every 5 years and say, hey, I haven't heard from you. Does everything still look okay in your estate plan? And sometimes they call and sometimes they don't, but it reminds them that we're still there. It's one of those things I think that you need to review and make sure that it still reflects your life, because one of the greatest mistakes we see in estate planning are when people set up an estate plan for the person they wish they were. It's kind of like when you go to the grocery store doing your grocery shopping for the way you wish you ate. And then you get home and you wish you had some snack food, right? Yeah. So similar situation with estate planning. I'll have people come in and do their estate planning, and they'll have this plan that contemplates a lot of charitable giving. It contemplates, their children being responsible, independent people, and ultimately that may not actually match their lifestyle. So your will should match your life, not the other way
around. Your current life.
Yes, absolutely. And things change.
Yeah, well, can you update it too often?
I don't think so. I don't think you can update a document too often, because people who have differing opinions or opinions that are going to change over time, it really needs to match how they feel at that time. And in fact, I have a client, and he is very dear to me, but he keeps his will in his glove compartment in his truck. And every time one of his children finds his will in the glove compartment, he calls me to change it. Because they have talked him into something, or he doesn't want to hurt their feelings. And we go through the whole rigmarole to make sure it's what he actually wants. And so he changes his will quite a bit. And I have advised him, why don't you keep this in a safe deposit box or a fireproof box in your house? But it just hasn't gotten out of that truck yet.
Yeah.
So
so you do all of these documents, and Anna helped me with my estate plan. So we do these documents, and you have all of these forms and papers. What do I do with them? Where should they go?
Great question, because the one thing to remember in West Virginia is that really only an original will is the one that can be probated. So if you only have a copy, that could create an issue down the road. That we have some ways we can attempt to get it probated, but there's no guarantee unless you have that original. So I suggest keeping your documents in a fireproof safe deposit box, lock box in your home. But if you're keeping it in a safe deposit box or that fireproof safe, make sure somebody knows how to get in it. So make sure their name is on that safe deposit box, or somebody has the combination to the safe, because it's not easy to get those things open once the person whose name is on it is no longer here to open it for us.
Now, you as the attorney, when you prepare an estate plan for someone, do you keep originals on file at your office?
Great question. We do not keep original wills. Okay. There's some liability involved in that. If we're the ones that lose your will, that can be a problem. Right. So we send it with you, and we also don't want to pressure anybody into hiring us after they pass to probate the estate. So we want people to have the autonomy if they would like to try it on their own, because in West Virginia you don't need an attorney to probate. We like to give them that option. So we don't keep the original, but we do keep original powers of attorney, so that if people lose the same document, we can make sure we have one to give them.
Well, that's good.
Good to know.
Yeah, good to know. Absolutely. Yeah. Okay. So, and also important, make sure you know how to get into your safe.
Yes.
And you inform your next of kin of whoever's going to be in charge there.
That's right.
All right. So obviously part of an estate plan, especially with dealing with small business owners, is succession planning, minimizing if you have a taxable estate, a very large estate, minimizing estate taxes and things
Sure.
like that. So what is, do you have like a tried and true method on this to minimize taxes on this? I mean, I know that's a really broad question.
It is a broad question. And right now, Chris, as you know, the tax laws are changing rapidly, and there's a lot of rumors about how they're going to change. You may have heard that, our unified credit is higher than it's ever been. And unified credit is that number that you're allowed to pass away with in America without paying estate tax. That's your lifetime deduction. So, which I know you guys know.
Right.
But that number is at an all-time high. So when we are seeing clients who have an estate tax problem today, there are some gifting strategies that we can utilize to avoid, not evade, the estate tax. And there are some...
Very important.
That's right. That's right. There are some strategies that we can use, certain trusts that we can implement that really help limit it. But sometimes someone's estate is so large that it's really hard to avoid the estate tax altogether. So the next step would be to ensure that there is liquidity within their estate to make sure that that tax can be paid within the 9 months from the date that they pass without having to liquidate their business. That's one of the biggest issues I see, Chris and Jay, with small businesses. As you know, sometimes our small business clients sink all of their assets into their business to keep it running. They put their retirement and their needs second to ensure that the business continues to grow. Well, without those people and without that liquidity, if you're looking at an estate tax bill, it has to come from somewhere.
Right.
So sometimes people are selling their businesses for way less than they are actually valued to ensure that that liquidity is there. So lots of different strategies, but gifting is a big one right now. We're utilizing some different trusts, but it will be interesting to see where this goes. I've been doing this for 13 years, and this is a really interesting time where we are planning with clients having moving facts, and we really have no idea what the target is going to be for a taxable estate.
And it has changed a lot. The example I'll give, I believe the number's over 12 million now.
That's right.
When I started in the profession long ago, it was about 625,000.
Right.
So, it's always a chance it could go back to a much lower number.
Absolutely. Historically, it's never moved backwards. It's always moved forward. But right now, we do have a sunset in effect in our law as it stands right now that it is going to move backwards. And this is my favorite part of that law. We don't know what it's going to move backwards to. So we're still planning with a lot of unknowns. The key point that I try to make with my clients and remind them is that these are good problems to have.
Right.
If you have an estate tax problem right now, you're doing okay. So not an issue, and it's something that we will work through. And it's also one of those taxes that you don't ever have to deal with. You just leave it for your family to deal with.
And it is something that's fairly close. I believe that sunset is in 2026.
That's right. That's right. So January 1, 2026, they tell us it's $5 million indexed for inflation, but we have no idea what that index will be. Some of the economists are pinpointing that at about $6 million. Okay. So going from 12.92 to 6, that's quite a change.
Oh, wow. Okay. So when we're talking small business, does a small business or the owner of the small business need to do any special estate planning, or does the business do estate planning? I mean, how does that work?
That's a great question. I think yes. And so really when you're looking at estate planning, it's succession planning, right?
Right.
Whether you're thinking about the entity that's within your home, your personal assets, or your business, you're looking at who's going to be in charge of this, who's going to be making decisions, who's going to benefit from this. And so with small business estate planning, you need to look at buy-sell agreements and partnership situations, making sure that there's options for buying something out. You might have a great relationship with your business partner, but you might not want to work with their spouse. I'm sure
Right.
you have clients
Sure.
like that.
Yeah,
Yeah.
sure.
So it's a lot of buy sells are important, making sure those buy sells are funded with certain amounts of insurance or other liquidity that they may have, making sure that you have the right people in the right places. So we've been talking a lot about trusts and how to transfer those assets. If you don't have the right people making the right decisions, I don't care how beautifully your estate plan is crafted, it's not going to work. So very important to have the right people. The other thing that I think is important for small business owners are making sure that powers of attorney are in place so that they can appoint someone to sign on their behalf or make decisions if there is something sudden or some situation that leaves them unable to make those decisions. So that there's never a lag in business operation, especially if you have employees depending on you for that.
Okay.
So those are definitely some thoughts I have about business succession. The other thing that we're seeing more and more of, and probably coupled with the estate tax changes, are dynasty trusts. Dynasty trusts are trusts that have been around for a long time. But you think about families who have very popular brand, I won't mention who they are on the podcast, but very popular brand products or companies. Their children and grandchildren may not want to work in that company. So how do you ensure that your hard work is still managed, but that the fruits of those labors go to the beneficiaries you choose?
Sure.
Dynasty trusts are a great way to do that.
Okay. So when you're setting up an estate plan and someone with a small business owner, how can the CPAs of that business, how can we work with you and our client to make sure you're getting all the information, or how does that work all together normally?
That's a really good question. Maybe it's because I'm a middle child, or maybe it's because I have lots of partners in a law firm that I really trust. But I think that everything is a team effort. And I am not an income tax expert. I'm also not an investment expert. So I think that everybody's financial advisors need to be in one place when we're doing an estate plan.
Yes.
So making sure that they're getting proper advice from their CPAs, from their financial advisors, from their stockbrokers, their insurance salesmen, whoever may be involved in that process during the estate planning is super important. What I look for specifically from CPAs is, I think, probably business values, making sure that our values are correct, especially when we're calculating that estate tax. Business valuations, as you both know, can be very, very expensive, but ensuring that there's some informal estimate as to what the business is valued. Another thing, it's surprising sometimes that small business owners may not have a good grasp on what their expenses are for operation, or what the value of their net income is at the end of every year. They seem to always know their gross income there.
Oh, yeah.
They seem to always have that, yeah. But it's important to know those things because we use those as measuring sticks to ensure that business succession is working.
Yeah, so obviously if you don't have good financial records, then you can't do business valuations because there's nothing to base that valuation on if you don't have good accounting records, and that's obviously where the CPA firm comes into play to make sure that your financial records are up to date, your tax returns are matching your financial records, and everything's caught up to date, because you obviously don't want to create an estate plan and then leave me a great estate plan and problem with taxes or anything like that.
That's exactly right. And as much as I trust my clients, I have to depend on the information that they give me. I am usually much more comfortable getting that information from their other advisors so that I know that what I'm getting is correct. They're busy running a business. They're not planning business succession day to day. They're not worrying about their financial records day to day. They're running their business. They're making sure that it's profitable for them and that their employees are taken care of. So having other advisors is very, very important. And it's a great way for business owners to relieve some of their mental load by making sure that they have good CPAs in place to handle that part of the business for them. Just like when I ask clients, what does your estate plan say? And they say, oh, I don't know. I don't know. And we have to go through it. I have to tell them what it says. Oh, that's not what I want. So there's a lot of balancing and relying on experts to make sure that things are in place.
I think Jay and I can relate to that.
Same thing with tax returns and financial statements. That, we do a lot of explaining, and it is very important. I know that you mentioned the different professionals to work with, and there's many times that I'll be in a meeting and I'll be saying, no, you need to talk to an attorney. I don't give legal advice. That's not what I do.
Right.
And everyone has their specialties, and it is very important to have those team members that specialize in their different skills.
Absolutely. And it's important for us as advisors to know where our scope begins and ends.
Yes.
I think that that's a strength for us to know that's not in my lane, and you really need to talk to somebody who can assist you with that.
Yes, that's it's important to stay in your lane as a professional.
Yes.
Very much. Very much.
Yeah. All right. So if someone has an estate plan and they pass away, what should the next of kin, maybe if the executor or the person that's going to be insured, what's the next step for that person? Or obviously they're passed away, but the next of kin, what
do they do?
Yeah.
So after somebody passes away, my first advice to a client's loved one who calls me and says, your client has passed, my first advice is take the next couple of weeks, plan a funeral, take care of yourself, and call me when you get the death certificate and you're ready to move forward. There's actually not a time frame that you're required to probate in West Virginia.
Now, what does probate mean?
Probate is taking probate assets, which are, I'll give you my cheat sheet definitions. A probate asset is an asset that's in the decedent's name alone with no beneficiary designation. A non-probate asset is either a jointly titled asset or an asset controlled by an outside contract like a beneficiary designation or a trust.
Okay.
So with probate assets, when they are about to go through probate, I like to explain that process start to finish and make sure that they know what they're getting into. And then we kind of like to guide them through that so that they're making wise decisions on how to go through that process. There are decisions to be made during the probate process, but if you have a good plan in place, it shouldn't give someone so much control that they can divert from your wishes. So one of the things that I would say about what you would tell a client who's getting ready to go through that probate process is there any person who would be a beneficiary under this estate who is struggling financially? Is there a small business involved where decisions need to be made right now and no one is authorized to make those decisions? Those two questions generally lead me to determining how imperative it is to start that probate process immediately. So that person would go get appointed at the courthouse either as an executor or executrix, which means that they are listed in the will to serve, or if they're not listed, they are called an administrator or an administratrix. And once that appointment starts, that starts a 90-day clock to file an appraisement and non-probate inventory. An appraisement is an inventory of all probate assets and non-probate real estate. A non-probate inventory is an inventory of all non-probate assets other than real estate. Okay. So they file that. It is public record. The appraisement is public record. The non-probate inventory form is not. And that's what creditors will use to determine whether or not there are assets there for them to file a claim. So a claim can be filed. We see lots of claims from final hospital stays, ambulance rides, sometimes funeral expenses, sometimes credit card debts. So claims will be filed during a creditor claims period, which starts after that 90-day inventory time period. The estate will be published in the local paper 2 consecutive weeks. That starts a creditor claim period of 60 days. And if a creditor does not file within that 60 days, that claim is not valid and it's thrown out. After that 60-day period, the estate can be distributed. Okay. So as you can imagine, during that time, you might also be selling property, having an estate sale, managing investments, things like that. With small business, you're running a company. So it's a pretty big job. West Virginia also now has a small estate probate process, which is simply filing an affidavit saying that there is under $100,000 of real estate and under $50,000 of probate property, and you file the affidavit and the estate naturally closes in 6 months.
Okay.
Yeah.
So I've talked to people before, that just refuse to file an appraisement or refuse to go, maybe their brother passed away and he had no next of kin or anything, and he had nothing. So they said, well, we're not doing anything with it.
Right.
Is that advisable?
It's not. In my opinion, I think every estate should be probated. Probate starts a statute of limitations for creditors. Mm-hmm. So if you go through the probate process and a creditor shows up to your loved one 3 years later and says, Jay owed me money, but you've already gone through probate, that creditor just goes away. If you didn't go through probate, you're probably going to end up fighting with that creditor for a little while.
That's good advice.
Yeah. So it's important to do the right thing.
Right.
is
Yes.
what you're saying.
Yes. As frustrating as it can be. But I always remind my clients, that's why I have a job. Yeah. If it's something that's feeling overwhelming, go get help for it. We also have some really great county clerks in West Virginia, and they're very, very helpful.
Thank you for taking time today to listen to our podcast. We appreciate listeners like you and ask that if you enjoy what you hear, please like and subscribe to our channel to ensure you receive the latest episodes as soon as they come out. If you have any questions about the topic we discussed today or would like more information on becoming a client, please do not hesitate to contact our office by visiting arcpas.com or theaccountingpodcast.com.